housing bubble. The market's going to crash. If I hear this one more time, I'm probably just going to internally be pissed off because, let's face it, anything outward would be an empty threat at this point. But we're not in a housing bubble. And there's a very simple reason, right? A housing bubble is caused by something outside of just natural market forces. And right now we are dealing with a supply and demand issue. Plain and simple. So here's my thoughts on what's going to happen with interest rates as we head into the 5%, possibly the 6% as we go into the end of the year. First thing that's going to happen, home values are going to continue to rise. If you look back over the last couple of decades, anytime that the mortgage rates have had a significant increase, over 1.5%, home valuations and values have stayed pretty consistent between 7 and 10% year over year growth, and I don't think that's going to change. The second thing that's going to happen is as interest rates continue to make mortgages more expensive, it's going to pull cash out of the cash reserves for buyers that are using those cash reserves for just ludicrous $100,000 over asking, full appraisal gap, yada, 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 whatever you want to call it. As interest rates make the loans more expensive, more of that cash has to go from covering appraisal gaps to actually qualifying for the loan, in which case I believe the competition is still going to be there because we're short homes for the time being. I just don't believe it's going to be as severe, and we're going to see less and less of the ridiculous offers covered by appraisal gaps and so on and so forth, which hopefully will make it easier for first-time home buyers. Third thing, because of the last thing, I think that housing prices and listing prices are going to start to come in line a little bit more with what market expectation is. Last month, we saw almost 12% nationwide price reductions on all listings, which is the most we've seen in 2 years. A lot of that, though, was because people were not listening to good real estate agents, and they felt like they could price their house at whatever they wanted to because the market was quote-unquote hot. And now we're starting to see that, pricing high at 3.5% interest rates versus pricing high at 5.5% interest rates are two very different things. And those prices are starting to come down. As those prices come down, the comps will start to settle down in a lot of those different areas, and you're going to start to see a more sane pricing strategy from a lot of different individuals that are looking at selling their houses, which hopefully will level the playing field for the buyers out there. So in summary, no, we're not in a housing bubble. What we're experiencing right now is the result of naturally occurring market forces, aka supply and demand. The housing market is not going to crash, so stop waiting. I think if anything, it's going to undergo some sort of correction, which I think is healthy, not only for the housing market, but for the mental sanity of anybody looking to purchase a property right now. And number three, when in doubt, zoom out. We got used to artificial rates of 2.5% for 2 years. Now that we're at the 5 and the 5.5%, people are losing their minds. And I just think that that's where we should be anyway, right? Just from a healthy standpoint, I believe that's where we should be. And I believe that's going to drive the correction, which is going to hopefully make housing a little bit more affordable as we go into the end of the year. And if we hit 10 or 12% interest rates by the end of the year, I will probably come back on here and punch myself in the face for being wrong. Being completely transparent. So we'll see what happens.